Time for the hot picks section of the program, and today we're going to talk about investing in biotechs. Our next guest specializes on the sector. David Nierengarten is the managing director of equity research in healthcare at Wedbush Securities. And David, it's a pleasure to have you with us. Biotech is not the easiest game. You have to put a lot of homework in to understand how it works. Before we get into your picks today, what's the first thing an investor should think about if they're looking at the biotech sector?
Yeah, I think the first thing an investor really needs to consider are the opportunities that the biotech company they're considering has. We like to joke a little bit. It's not really a joke that the downside is always 100% with biotech. So you might as well look at companies with the largest market opportunities or the best areas for expansion into different diseases, treatments, and things like that.
And obviously, that's a consideration for the potential risk. But is it fair to say if you get it right, sometimes you can hit a real home run in this sector?
Oh, of course. There's plenty of examples of stocks going up, 2, 3, 5, 10 times in the past. And I think that, again, is really coming from leveraging to the best growth ideas and the largest indications that you can find that are still addressable by a smaller company or a still small biotech company.
Okay, let's go through some ideas today just to give our audience a sense on how you're looking at names in biotech. The first stock you're watching is argenx, which I think this is also an example of a company that saw a negative reaction to financial results. Is that correct?
Yeah, I think the Q1 earnings really were misunderstood by investors. The commentary around kind of a worsening gross to net on their lead drug, Vyvgart, which is approved in myasthenia gravis and CIDP, two rare neuromuscular diseases, was really coming from patients switching to a pre-filled syringe from going to the doctor's office. That's reimbursed under Medicare Part D as in dog and not B as in boy. And it has a higher deductible, and so the gross to net suffered a little bit. But the pre-filled syringe obviously is way more convenient than going to the doctor for an infusion or an injection. And the growth from patients switching to the pre-filled syringe is going to easily overcome any small margin deterioration from a gross to net change.
All right. Another stock that you're watching is SRRK. This is Scholar Rock, which I believe is based in Cambridge, Massachusetts, and focuses on a range of developments for treating diseases, everything from cancer to neuromuscular disorders.
Yeah. Yeah, but what Scholar Rock is really focused on in the near term, they're going to have two events. One is a release of data around their program combining a drug, apitegromab, with GLP-1s. Now, apitegromab is a drug that prevents muscle loss, and so the idea is to maintain muscle mass, lean body mass in patients who are losing weight on GLP. So they're really losing the most fat and not fat and muscle. We'll get data for that in June, and then very importantly in September, they should have that drug approved in spinal muscular atrophy, a rare disease, affects children. It's a terrible disease, but again, it prevents the muscle loss, muscle wasting in those patients that eventually, unfortunately, causes their early demise. And so we're looking for the stock to, get positive data in obesity, but get an approved product on the market by the end of the year, and then hopefully engineer a more patient-friendly obesity candidate in the next 12 to 18 months to help boost growth prospects there.
Okay, and the final name that you're flagging for our audience today, also NASDAQ listed, the symbol is KNSA. Tell us a little bit more about it.
Yeah, Kiniksa, has the only approved drug in recurrent pericarditis. This is an inflammation in the sac that surrounds your heart. It's extremely painful. It can be recurrent in patients. It's a cause of trip to the emergency room because of the pain. They have a really good treatment for it called Arcalyst. The franchise is cash flow positive, but they share economics with Regeneron. what I see as a real catalyst for growth with them is the development of their wholly owned asset. It's easier to inject once a monthly injection, less frequent injection than once a week with Arcalyst, and we should see initial data for that next year. So a little bit of time, but in the meantime, the Arcalyst franchise is cash flow positive. The company, is a rare case in small cap biotech where they don't have to raise money anytime soon, if ever. And in the meantime, you're waiting for them to get their wholly owned asset data out there, and I think that will trigger an acquisition by a larger pharma, honestly, in the next 12 to 18 months.
Interesting. Okay, some trends there to watch. David, thanks for your time and sharing some hot picks with us today. Appreciate that perspective. When we come back, the